So it looks like folks are coming in, and it's the top of the hour, so we'll get started. I am Stephanie Titzel. I'm the Pennsylvania Bar Association's Director of Communications and External Relationships, and I'm really pleased to welcome you to this webinar. It's our first with FincenFetch, who became a new partner of ours a couple of months ago, and I'm really thrilled to introduce you to Charles Wismer, who is the CEO of FincenFetch. For those who don't know, FincenFetch is an incredible resource. They work with compliance for law firms across the nation and help attorneys incorporate beneficial ownership reporting into their portfolio. The PBA, your PBA membership includes exclusive access to webinars about the Corporate Transparency Act, as well as discounts. There's a 20% discount on the co-branded site that we have with FincenFetch, which is right on PBA's homepage, right at the bottom. You'll see FincenFetch's logo listed. If you click on that, there's a great co-branded page. At the bottom, there's a really good ebook on the Corporate Transparency Act too. So be sure to check that out. A couple quick housekeeping updates. All lines are muted, but feel free to include any questions in chat, and Charles will answer those as he goes along. We also have an email address where we could be reached at sponsorships@pabar.org. So if you have any technical issues or any questions after the webinar, we're happy to answer them there. This presentation will be recorded. It will be on our YouTube channel later this week for sure. And hopefully we'll get into our e-brief tomorrow. So that's our goal. I'll now turn it over to Charles, who will walk you through how to navigate the Corporate Transparency Act and how to incorporate FinCEN filings into your firm's portfolio. It's a great profitable opportunity for all firms. So thanks, Charles. I'll let you get started.
Sounds good. Thank you, Stephanie. First of all, let me pull up our presentation here. So my name is Charles Wismer. I'm the CEO of a company called FincenFetch. To give you a little background into us, we've been looking at the Corporate Transparency Act for the better part of about 2 years now. We started following this with the launch of the National Defense Authorization Act and realized, this is a whole new filing. It's affecting 40 million U.S. companies, very, very large piece of regulation, all dealing with a new regulator. So we began building solutions for specifically law and accounting firms to help their client bases with these filings. One thing that we do uniquely here, I think, in the Corporate Transparency Act space is we do not provide filings for the end business owner, but rather we provide the tools for professionals like yourselves to be able to handle lots of these filings and ongoing CTA compliance. So based on, I guess, that product service that we offer, we've had lots of conversations, to our nearest estimate, north of 5,000 with firms across the U.S., both in law and accounting. And the goal of this webinar is to share the contents and resources and insights that we've learned from all those conversations about the market, how pricing works with this, what firms are typically doing for future year compliance, how operations are handled for this, basically a little bit deeper dive than, just what is the CTA, who needs to file, when do they need to do it. But we get a lot more into the weeds in this one, so you can kind of plan your operations as a firm as to how you want to offer this to clients and the important points that you need to know to address. So I will dive into a brief intro into the Corporate Transparency Act, just to kind of refresh anyone who isn't completely up to date with this. So if you're dealing with a lot of clients, you're going to have to explain to them, where did this come from, right? Because there's a little bit of a resistance, of course, with any new filing, any provision of U.S. or information to the U.S. government. It's not something that business owners typically, volunteer unless it's something they have to do. So, the best way to frame this is it was a bipartisan act. It's part of national defense. It essentially gives the U.S. a database where they can type in a name and know any entity that an individual is linked to, or type in a entity and know all of the individuals that have both ownership or substantial control. So it's a pretty powerful tool for law enforcement and government research. It's something that they already have in most countries overseas, but due to our decentralized state structure, where you can have, for example, private LLCs formed in Wyoming, we didn't really have anything like this in the U.S. So this is essentially us filling that knowledge and national security gap. That's where it came from. So why do these exist? Essentially, this is to provide that central database. Now, one important point about this is it's not public access, right? This is only available for the U.S. government, banks during onboarding of new accounts, and kind of very, very select industry sectors to be able to access this for verification. It doesn't affect things on the civil side. For example, there's no public database where you're suddenly going to be able to find who owns a Wyoming LLC very easily. So one thing that you can tell these business owners is, at least your privacy does remain in the civil side of things, but obviously from the federal government looking down, they're going to have more information about the companies and the individuals that own companies here. And then, most of you probably know this, but what is on a BOI report? It's three sections of information. One that you definitely need to be most aware of, it's information about the company itself. So that includes its name, the legal name, the address, and that address is a different format. It's not its PO box or third-party registered agent address, but it has to be a primary business operations address. The way that you should look at that is an address where somebody at FinCEN could go knock on a door and speak to an owner, about the company if they needed to. And then it's DBAs and the EIN. And then, of course, you also have information on all beneficial owners, including their full legal name, their date of birth, the current address, and identifying number from a document. And then, of course, an image of that document, too. So that's typically an ID, driver's license, or a passport. And then lastly, new companies must also list company applicants. For attorneys, something special to know. Company applicants are those who help create a company, handle the formation or direct the formation of a company. So typically, you're not going to be providing your ID to the clients to, file these things on their side, but rather you're going to go to FinCEN. You're going to get that FinCEN ID one time. It's a 12-digit number that says, I've already given FinCEN my information as a formation provider. They've given me back this reference number. You use this on your report when you file into FinCEN, and you don't need my ID and my home address and date of birth and everything there. So something definitely to keep in mind. If you're handling formations, you're a company applicant now for all companies after 2024 or January 1st, 2024. And definitely best practice is get that 12-digit number. It's quick. It only takes about 5 minutes to do that. And I'll show you where that is later on as well. So who needs to report? Well, basically, it's every smaller U.S. company. And it's going to be most companies that come on your radar and even ask about this because the exemptions are extremely rare. Most of the exemptions are reserved for industries that already report their beneficial ownership information to a regulatory body right now as it goes. So the government already has a database on most of those other exempt categories like, utility providers, commodities, tools, things like that, SEC registered persons and companies. So typically, the most common exemption that you're going to see in the private sector is going to be the large operating company exemption. It's three-pronged. So you have to qualify for all three to not have to file a report under this one. You have to have 5 million or more in annual sales, 21 or more full-time employees, and you have to have a U.S. office. If your company meets all of those, it's a large operating company, it's exempt. Something we've noticed in the field on this as well is most large operating companies already know they're exempt and they're not going to ask about Corporate Transparency Act filings because often one of those, say, 25 employees handles compliance or, they're already seeing industry publications due to their specific scope that have identified what the Corporate Transparency Act is, and they already know they're exempt and probably won't ask you about it. But it is safe to assume that most of your smaller companies or your smaller clients are reporting companies. And often they have many reporting companies. So keep in mind, you have a client who might have one business that he or she handles operations with your firm on, but they also maybe have a rental portfolio. So, typically you'll see a structure where there's a LLC that, handles each door in that rental portfolio to protect the liability. All of those become reporting companies as well. So one thing to keep in mind is that the amount of reporting companies a client initially thinks they have is often vastly underneath what they might actually have when you start averaging it out across all of these different vehicles people are using to manage their finances. So when do the reports due? Well, it depends on when the company was formed. So if the company is an older company, meaning it was created in 2023 or before, you have until the end of this year. Technically, it's the end of the first day of 2025, but safe to just say the end of this year for it. And then if it's a new company, you have 90 days after the formation. So if you create a company tomorrow for one of your clients, you have 90 days to file that initial report. Now, one confusing part about this is that 90 days reduces to 30 days next year. So after the first of next year, if you're creating a company, you have to have that initial report in within 30 days. Now, one important thing is we hear a lot of this one and done language around BOI filings. That is a rare situation. There are 51 data points on a FinCEN report. If any of those data points change, it requires an updated report and it requires it within 30 days of the change. So one thing to keep in mind for your operations is if you're handling this for your clients, you need to plan some way to remind and educate your clients about this and make it easy for them to request those updated reports. Typically from their side, because some of those changes only they're going to be aware of, you won't know unless they're telling you about it. So giving them the information that they need to let you know when they have an updated report is really critical. What we see often for updated reports, the most common trigger is a owner's address changing. Remember, substantial control is one of those requirements. So that doesn't necessarily need to be the 25% equity owner or above. It can be, an LLC manager or something that they hired who handles operations and makes decisions at the company. Say they change apartments, that's an updated report. It's a very common one. And, depending on your practice areas, your companies might have a very, very high frequency of updated reports. For example, if you handle HOAs, we see a lot of updated reports of HOAs because the boards are always changing. Same for early stage companies. There's several other practice areas that are uniquely affected with a lot of updated reports per year per company. We went over that exemption, but we'll dive into a full list, which we have available on our site as we get a little further along. So one question we get a lot is, what is the market pricing these reports at? And this is kind of a bit of a spread across the board based on the industry verticals, but I would say that the industry verticals that are handling most of these reports are either attorneys or accountants. So attorneys typically fall in a range of 400 to 600 per initial report. I've been seeing an increasing trend with attorneys also including updated reports in this pricing, where they're starting to cover this as an annual service, similar to how they would cover the annual reports for companies for the Secretary of State, where they're kind of rolling this in. It works very well because you're going to be aware of these transactions. Sometimes that'll trigger an updated report, and then it also creates ARR for the firm. We'll go into what that looks like a little bit later on here. And then accountants are typically a little bit less per initial report. We're seeing a range of 300 to 450 for the accounting side. So generally, it seems like law is charging a little bit more for this. Now, of course, the benefit of that is you can also provide a more complete service. Accountants have to step away when it gets into practice of law, to the point where they are not able to, for example, go through the nuances of a complicated organization document or something like that. So for those kind of documents, you're going to want an actual legal analysis. They will not be able to do that. So it has to go to the law sector for that. And then, one thing to keep in mind is that you're uniquely affected when creating companies as well. So for company applicants, when you're creating these companies, you need to make sure that initial report includes your 12-digit number on these as well. But it's a very, very large industry. So if you take a kind of a look at the 40 million companies needing to file that, and you factor in that about half of them typically work with professional services, whether that's for taxes or legal matters, and will typically be used to, a thought pattern where they're going to call somebody to handle their compliance matters. It means that, they're going to be calling one of these professionals. When you look at these average prices and the amount that'll be calling it, it's about in this initial year of a $6.7 billion market. So a very, very large market in its first year, and it's not necessarily shrinking that much in the second year onwards because of the updated report requirements. So yeah, we did discuss a little bit about those extra LLCs. One thing to keep in mind with the clients is when you're recommending these services and you're offering these services, you want to make sure to let them know that they need to think about all the LLCs and corporations and S classes that they're attached to figure out which ones need to file these reports as well. And these are some of those very, very high frequency industries as taxation, real estate, business law, any work with VC or PE and estate planning. We see a lot of that. And one other thing to mention there is HOAs. If you do HOAs, there's a lot of updated reports that'll happen per year for those organizations due to the directors changing out. So regarding new client opportunities, there's a large subsector of the market here that is looking for somebody to help with these. So typically what that means is they're going to do a Google search in their local market. Now I can speak from our client group. A lot of our firms have had enormous success when they start advertising into their local markets. We have several hundred firms that use our platform, so we can kind of see which ones have a higher frequency. And also during the onboarding, they'll often mention the marketing campaigns and whatnot that they do. And I will say that, those advertising that they do Corporate Transparency Act filings, to their local area and through their typical advertising pipelines, are attracting a significant number of new clients. Because remember, this is one of those unique times where it's not the standard pool of business that may or may not need services that fluctuate each year. This is a new regulation that impacts almost every small U.S. business. In fact, if you just look at the drive home from your office to your house, 95% plus of those signs that you will drive by are smaller U.S. businesses that are going to need to file these reports. So a lot of new clients will enter the market, and especially when they look at those fines. FinCEN has been traditionally a little bit aggressive on pursuing fines. If you look at FBAR reports, for example, those $10,000 fines that they have if you don't disclose a foreign bank account, FinCEN does not like to waive those. This database for the government will not be useful unless it stays up to date. So FinCEN is unlikely to be lenient on people not keeping these reports updated or getting the initial filings in time. So that's definitely something to keep in mind. And there's a low likelihood of a client being able to, escape enforcement on this because if you look at the structure of FinCEN, one very important thing to note about this is it's all under Department of Treasury. You have IRS, which takes a yearly return with K forms. that collects all the frequent information about the business, all of the owners, the updated address. FinCEN is parallel to them under Treasury, and they do compare databases. So it'd be very easy for FinCEN to, spin up a quick tool that says, okay, let's compare the latest BOI report against the latest partnership return and find any discrepancies and send out fines. So something to keep your clients aware of, that it's not very likely that, they'll be able to remain unnoticed if they're failing to keep these reports updated. So you definitely want to keep them updated because the fines are severe. It's $10,000 for failure to file. Technically, they have a 2-year, jail sentence they can issue, and I'd assume rare situations for it. But the most common one that they're probably going to be giving to people is the 591 per day dollars per day late penalty for these reports. So technically, that can start at the 31st day for updated reports. So something to keep people aware of. But if we're looking at the market size here, there's about 33 million companies in existence today that need to file these reports. There'll be 5 million new companies formed this year that need to file initial reports. And then there's also inactive and underreported companies. So that means there's a certain amount of companies that are getting dissolved this year, but because they were still in existence after the first of this year, they do still need to file those reports. So something to keep in mind, if they dissolved last year and everything was unwound, they don't have to file this report. But if they cross past the first of the year before everything became official, then they do need to do one Corporate Transparency Act BOI report, and they can mark that as a final report as well. And then let me go into a little bit of what we're looking at for the ongoing compliance. So remember, any of those data points changing requires an updated report. So the easiest way to keep your clients in compliance of this are, number one, inform them of this. Let them know that this is not as simple as a one-time filing. If anything changes about the company, and some common changes are, a new owner being added or removed from the company, an address change for any of those owners. If an owner uses a passport, a reissuance of the passport changes the passport number, which requires an updated report because that's one of those data fields. One of those lines is the document number itself. So that can trigger an updated report. Anything like adding a DBA, changing the primary office address. These are the most common updates that we see. Then other situations where, you have to look at that substantial control requirement. If they hire an individual that has the independent authority to have substantial control, such as maybe handling leasing for assets or something like that, that person entering or leaving the company or any information changing about that person also triggers that updated report. That's a great question. Let me pause for a moment and answer those two. What does one do for the 2024 formed entities beyond the 90 days? So the best policy here is get that report in as soon as possible. This is a bit of a chaotic year for FinCEN. FinCEN's only a department of about 291 people. I assume that they are staffing up quite rapidly, though, with this new regulation that they have to manage. So I would probably say that it's a good idea to get that report in as quick as possible. And I will say that, just anecdotal evidence that we do see a lot of companies have missed that 90-day mark. So, if I had to guess, and FinCEN was to give some leniency around anything, they might give some leniency around those initial reports that are a little bit late this year. But I would recommend filing it sooner rather than later to at least stop the count on any potential fines there. But I wouldn't be surprised if we saw a little bit of leniency. I think it's more important to them that everything gets filed by the end of this year so they have a full database for the government to use. And one thing to keep in mind, too, this is something they take very seriously. The director of FinCEN was replaced prior to this year, and the new one has indicated it is a very, very critical priority for them to get this rolled out in a timely manner. What if a company files with the Secretary of State but doesn't get an EIN? What triggers the requirement to file? So it's the timer starts when the document gets approved by the Secretary of State. So whatever stamp date you have on that, that is the start date for the timer. Now the EIN is very, very important. So if they're going online, they could typically get an EIN almost same day. But one thing to keep in mind is sometimes when you have foreign owners and whatnot, they don't have that online flow for it. So that can, require a little extra time. So it's important to let them know to get the EIN ordered as soon as possible. Now, we have seen some firms submit the initial report underneath, say, one of the owner's social security numbers if one is available, and then do an updated report over that. I wouldn't necessarily recommend it, but in that very rare edge case where you can't get an EIN within 90 days due to a foreign owner or something like that, that's maybe one kind of creative approach that you can do to, remain in compliance with the regulation as best as possible, and then, fix the report later on. If a company was liquidated in 2023 and filed final taxes and closed bank accounts, but awaiting final tax clearance to file a certificate of dissolution, is it still considered inactive and required a filing? or is it considered liquidated in 2023 to avoid FinCEN filing? So I think their official position on this is, when you have a full dissolution issued at the state level, just as when it starts a timer, it also ends the timer. I think that's the position on this, but some of these edge cases, FinCEN does need to provide a little more clarity around. They haven't been too specific, I believe, on that one specifically yet. Yeah, I think the timer is best to observe at the state level because that's kind of how they're defining a reporting company. Is it comes into becoming a reporting company when it's formed and stamped off in either a state or tribal jurisdiction. So likely the same for the dissolution side of things as well. All right. So for future updated reports, this yes, I'd appreciate information on the resources. Okay. All right. I see that one. All right, so let me describe some things that we're looking at for future years and how we're seeing a lot of firms handle updated reports. So for the initial reports, obviously every company needs a file in this initial year, but once you've done an initial filing, clients will typically expect your firm and your staff to handle those updated reports as they come due, and they'll reach out to you when these things change, as long as you've informed them of the updated report requirement, which is absolutely critical to do. Now, what we see for pricing structures around this, we see a couple different variations of it. I do see some firms that remain at, say, when you do an updated report, it's $400. It's just a flat fee how we do these things at the firm. But I also see some creative structures around creating ARR around this and making it an ongoing annual item to kind of manage that compliance for them. So one I see a lot is, say, 200 a year, where each entity, or looked at a different way, each EIN has a line item charge of $200 per year, and maybe it includes one updated report, but it includes those reminders, the data storage, access to those records. FincenFetch, for example, we put all this in a nice dash panel to give them full experience and make those compliance reminders automated and easy, their requests simple. But a lot of times what they'll do is they'll bundle these kind of services, whether they're using a software like ours or manual processes, and then establish some kind of annual amount that will maybe include an updated report. And I see this vary. I see sometimes this is 300. I've seen it at 150, and this is for year 2025 and onwards. To be clear, for year 2024, I'm typically seeing all the reports coming in at these prices. And then I see other ones as well, where there's some kind of $50 per year item. And what this does is just covers the reminders and the data storage, but firms are still billing them often at a discounted rate when they need to do an updated report. So I see a lot of things like $50 per year and $200 for updated reports, which is half the price of, say, the initial report that I'll see often from the law industry. And then it includes those items. So it's kind of up to you how you want to structure this, but you really have three choices. You have the option to just stay with the standard flat rate pricing that is very common in year one. The option to include a elevated, say, ARR item that will include maybe an updated report, and includes all those functions and features and reminders and access to filings, or even a lower one where you're charging an amount then incrementally per updated report. So it's up to you on how to engage that, but definitely it's something that you want to plan for, because supporting these services in an ongoing matter. And we'll go into operations, what it looks like to handle these reports at scale inside of your firm, but you'll see why you'll typically want to have some kind of revenue just to keep these systems and processes available, whether you have software or a manual process for it. So what we're looking at for the updated reports, we're looking at about 13 million reports. This is due to some kind of basic math of what we've seen on our platform from having a few tens of thousands of clients running through it, and early preliminary data on updated reports. Typically, a lot of the updates are coming from address changes, new owners, new board members coming through. We see some on ID changes, some on office changes. But when you look at, say a data point like 11% of Americans move each year, so you have 3 on a, semi-complex entity, it's more likely that an entity is going to have more owners if they're interacting with a law firm. If those 3 owners will create a 1 in 3 chance of an updated report statistically alone, just by their address changes. So when you go and factor in office address changes, DBAs, changing members of the board, you're looking at a lot of industries where realistically, it's probably about 40% of these companies to 50% will have to file an updated report in any given year. They just need to be aware of the requirement to do that. So that's something definitely very important to know. In the updated report market, it's not something necessarily to ignore. Just like the initial report was a $7 billion market, you're looking at roughly around $2 billion for ongoing filing. So if you're evaluating this from a is this a revenue producer? It absolutely is for both law and accounting. And typically clients are going to be reaching out to you all first about this, especially if you've handled the formation of the company. So client expectations. Why are attorneys specifically on the front line of this? Well, number one is the entity creation. Number one, I mean, there's really only two professional services that are dealing with companies on an ongoing basis. The first are attorneys, who are typically handling any of their more complex matters, the formation of companies, and then CPAs are doing things like accounting and then the tax filing. But you generally will interact with them first when they have a new endeavor or need to spin up a new entity, whether you're helping them with the operating agreements for that or just doing the formation or whatever that looks like. But when you do that, you need to make it clear to them, of course, that they have this new requirement that they need to do. Otherwise, this new entity will start becoming fines to them, after that 90-day mark. So it makes sense to help them with that for the initial report. So it definitely puts you on the front line about it. Secondly, information about this CTA. So a lot of the accountants out there, now that there's been some attorney general opinions that, explain they can walk through clients through the regulation and the nuances and rules of everything, it is complex. So a lot of them don't necessarily feel too comfortable going through the really nuanced details of FinCEN's 59-page guide on this. So a lot of times they're going to be asking you because they understand you're going to have a higher level of input and availability to give them input because you can practice law and advise, versus the accounting side. And then the other thing is you often facilitate transactions in the law sector that trigger these updated reports. So, when you're adding new people onto the board, there's many different situations in which the company's going to request something from you, and you're going to say that does create some change to substantial control or the cap table in such a way that there needs to be an updated report. So something to keep in mind, you're on the front line of all of these. Even if you're not offering the BOI services as kind of a broad marketing push to capture new revenue from this and attract new clients, your existing clients will need this service in certain transactions that they're going to engage with anyways with you. And then we do want to devote a little bit of time to self-filing, and I'll show you a couple of details on what it looks like. So if you're not offering the service, and we've had some questions about this, both from, say clients, but we've also had questions from staff members who were using the system, say before they decided they want to go the route of software. Let me show you what it looks like if you don't have a good system in place to handle these filings and if these owners are going to self-file. So they're running into two problems. The first problem is they don't understand what they need to do because FinCEN's expectation is they go over here to small business resources, they go over here to the small entity compliance guide, English, and then this thing downloads here. And then the goal is that the business owner will take the time out of running their business to understand and read this 59-page manual or 57-page. Now, this is in a perfect world, yes, every business owner would understand everything about it, but it's the same reason that business owners don't file their own corporate returns. It's a lot of time and it's a little bit dangerous to go down the rabbit hole of, handling your own compliance matters. So what this guide does, though, is it's great information for you. If you haven't read this yet and you're working with a CTA, I do recommend reading this. There's definitely condensed versions of this material, but it is a pretty full guide on it. It's just not something that your average business owner is going to find time to do before they go and file the report. But it does walk through, do you need to report to your owners who these beneficial owners are, going to that definition of both substantial control and the equity requirements, and then what happens if you have warrants and options and things like that. What is this company applicant? What specific information needs to be included about each? And you can see as you go through it is a very, very detailed guide, but it has a lot of confusing matters here. It's generally not too well understood by business owners. We do link this, for example, in our filing flow, but then we create a very condensed version of it that gets them the information they need to know without having this very long guide. And we've noticed that 99% of our users, if they go open this link, they typically stay on it for less than a minute, and then they come back and they read the condensed version. It's very hard for people to digest. But moving back, I'll show you why this creates a bit of a problem for self-filers, because the expectation is that they have read that guide when they come over here to the online reporting system. Now, the problem with the online reporting system, number one, is there's no way to save information here. So you're going to go through this, and hopefully the API on the back end of this is online at the time, and it takes a submission without error. Otherwise, you have to restart the reporting process from the beginning. The other problem is that there's no way to save a report and load it in for an updated report. So if you're going through an updated report, you're going to go here and you're going through all of those same steps from square one. This is very inconvenient when you have, say, a client that has maybe 12 entities because they have some rental properties or 3 businesses or something like that. And then they move, they just change their home address. And now they have to do these 12 reports all manually, collect all these IDs again. It's a bit of a chaotic process. But The deeper problem goes into this. We see a very high rate of failure when people are going through this on a self-filing process. If they have read and understood the 57-page guide, then they will know what all of these data points mean. If they haven't done that, that data is not available in the filing flow. It does not explain things the way, say, a software solution walks through the regulation. It helps collect the information in a way they understand. It just collects the information and hopes they know what all the fields mean. So we'll go through a little bit of this. Reporting company, it asks for the legal name, it asks for those DBAs, tax identification type. This stuff is fairly clear. It doesn't define the U.S. address in that it needs not the registered agent address, not the PO box. It needs that physical place of operations address. And in fact, in counter to that, it actually lets you enter PO. I don't know why they have this, but it lets you enter PO boxes here, which you're not allowed to do on a FinCEN report. So that's important to know. Moving along, the next step is company applicants. Now, remember, this is kind of an odd placement for company applicants because all of your older companies don't need to report this step. In fact, what they should be clicking is 16 and blanking out the report. But that's a scary thing. Anytime that you introduce a prompt that says we're going to disable all of these fields, people tend to click out of it. And what we generally see is people submit their own information in here. They generally don't know what a FinCEN ID is, but this box pops up a lot for them. They don't know what to do with this box. But they'll generally find these, asterisks, and they'll start putting the information in over here. What we generally find, though, is that company applicants, it's actually the business owner reporting themselves for it, often for older companies, which isn't necessarily correct. If they're a newer company, and they had help filing it, then they need to put in their actual company applicant, which is often an external provider, such as, an attorney, for example, the company applicant. And if they're an older company, this all should be disabled and blank. Next is beneficial owners. We see a lot of problems here with self-filers because, well, they flow through this form. They don't understand many of these fields. They don't understand FinCEN ID. They get to 38 here, the required field, and they see individual's last name or entity's legal name. We'll often see things like, Smith Accounting or something like that. They'll put the entity's legal name in here, and they'll say, okay, great, I'm John. And then they move along with the report here. But you're only actually allowed to put in the entity's legal name if you've clicked exempt entity box 37 here. Nothing explains this here, though, unless you hover on the tooltip for long enough, and it gives you kind of a, confusing definition here for what to do. Now, moving along, residential address, ID uploads. Once they get to the bottom here, they typically click next. Here's the problem. Unless they know to go back up to this blue button, they're just going to proceed along down the form. They're working just like any user on the internet anywhere. They work from the top to the bottom. They fill in the boxes. They find a blue button. They move along. There was no warning here that says add all of your beneficial owners or you're subject to fines. There's no warning here that explains, did you include all the people that have substantial control? Not just the single beneficial owner, the equity owner. So we see a lot of underreporting of beneficial owners in this step as well. And then, of course, when you get to that last step, you're submitting. And when you submit, you get a call, assuming nothing happens on the submission because this system is a little finicky sometimes. But if it comes back, it's not checking any errors. It's simply saying, did you enter all of the required fields? You did, great. Here's a transcript. So the assumption now to the business owner is, great, I did it. I got a transcript back, I win. But the problem is that, if they've underreported those owners, they have themselves an applicant, they have PO boxes on the report, this thing can be full of errors that, will be detected at a later date once FinCEN does a review of this database, likely after January of this next year, and fines can be issued. So it's dangerous to put them the path of self-filing because they're not likely to get all of these fields right. They're not likely to read that 57-page guide. They're not likely to understand substantial control, company applicant, what addresses to provide, or all of these various new definitions that are introduced with this regulation. It's confusing to people. So anyways, something definitely to be aware of. If people are going the self-filing route and you want to advise them a little bit on what that looks like. One sec, let me just switch back to our guide here. If I can find it, one moment. There it is. Okay. All right, so we went through those two. The problem is that they're not likely to read the guide. They will get some things wrong on the portal if they're going through that. And one other thing to make your clients aware of, they need to ignore all letters that come to their mailbox talking about BOI filing. FinCEN has not sent out official letters. They don't send out any letters that require you to put your BOI information in an envelope and send it back to FinCEN. They definitely don't send any that require you to put your bank account information or a credit card. Nobody really knows where these go. Nobody knows if they'll actually file a report, if they're just stealing PII and financial information. But warn your clients, any letter they get about this, it's requesting information or requesting a payment. If it's not just a simple alert from Treasury, for example, they need to just discard these letters. It is a real regulation, but there's definitely a lot of bad actors. I think everybody at our company has seen about 3 of these letters come in. So this is definitely something that's rampant right now. Clients need to be advised, do not engage with these. These are not official notices, they're not official phone numbers. They're just nonsense. And the tricky thing is they often come from Washington, D.C. as well. So they look quite official, but they need to be discarded. So next we'll dive into, just check my time here, what it looks like to handle these BOI reports. So the actual steps of what this requires. And this is something that's definitely very, very much interesting to firms because you have to plan what it looks like to staff these requirements, what it looks like to do this interaction with clients, how to actually plan an operations process here that is something that's sustainable, that you can do to not just support your initial reports for clients, but also your updated reports when they ask for those in future years. So there's a certain time requirement if you're using a manual system, and I'll kind of show you 2 options here. One that leverages software, one that's manual. Manual one is definitely time burden. So if you're, a firm with a larger amount of clients, it's going to be a bit cumbersome, and you likely need staff to, facilitate this. If you're using software, a more automated approach, you don't need to. You can blend it in with your existing admin tasks that you have, paralegals or anyone handling at your firm. But step 1, you just speak with the clients about the regulations. So that means each client is going to need to know, what is the CTA? Why do they need to do it? Why they can't just ignore this and not do it and everything will be fine? And that requires a certain time with each client. Obviously, some clients will get it very, very quickly. Some clients are going to be more resistant to any kind of new regulatory filing, but you need to make them aware. So a little bit of a time requirement here on the step 1, just to let them know about it. And then next, you need to collect this information. So if you're using a system like a PDF form, that's going to be a little bit more of an arduous process because they're going to have a lot of questions. They're going to get to that address line and they're going to say, what address can I put in here? You're going to have to, field some emails back and forth. You're going to ask, is Bob a beneficial owner? Susan manages our leasing. Is she a beneficial owner? And you're going to have to facilitate a lot of this back and forth, just collecting this information and answering those questions. We typically see about 15 to 30 minutes per client before they, have understood a more manual submission process. Next, you do need a digital system in place to capture those IDs. Ideally, that's not email. As you're likely aware, it's not a great idea by policy to pass, ID cards or driver's licenses, passport images over email. It's not the most secure system for it. So ideally, you'll have some kind of file drop system where, after you have this PDF or whatever data form collection you have for the 51 data fields, you then have a way to capture these ID images from them in a digital fashion, because you're going to need that digital version to upload, either to FinCEN's system manually, or if you have a software is going to handle this for you. But anyways, you definitely need that. Plan that as part of the step. Then next, you need to review and obtain client sign-off, because obviously they need to check this filing and make sure that they've included all the owners, take responsibility for that before it goes into FinCEN, because only they can know if they've omitted somebody with substantial control or if some data point's not accurate. So you have to give them that opportunity to sign off on it, both for your firm's liability and just to make sure you have accuracy there on the back end before it goes in. Typically, we see a double filing process as well, meaning that you're going to take the information submitted in, whatever manual process, email, PDF form, or whatever. You're going to put that into whatever case management system or file manager you have. And then once again, you have to submit it into FinCEN afterwards. One thing that's very important here, you don't want to introduce new typing errors or those kind of things. So you want to be very careful when this information is transferring, whether you have a double check policy or something in place there. But that's going to add a little bit of time per report as well. And then, of course, that's going to result in a FinCEN transcript. You need to have a safe place to store those because they do include PII. You need to get those back to the client if they've requested that, or that's part of your operations flow. So you're adding about 10 minutes per report there. And then next, you need a record keeping system because you need to be able to store these historical reports. They are a compliance record for them. And then also give them a good jump off point to start an updated report. So ideally, you have the last report ready to go. So they only need to change the details for the update for you to be able to resubmit it. But you need some kind of record keeping system in place for that. And then ideally, you'll also have some system in place. And this one requires some time per day as well per your client load, because you're going to have some clients that won't necessarily get things back in time. Every firm knows who these are. There's a certain bucket of clients that, they're just very busy with their businesses, or, other things are distracting to them. And you typically have to reach out more than once to get these things back. So in this case, you're going to need the information from all the beneficial owners, information about the company, all of these ID images that require some reminding, some sending emails if you don't have an automated reminder system in place to get all of this done. And then on top of it, you need some kind of consistent education campaign that's going to notify your clients about updated reports. We have a feature on FincenFetch to give you an example of how we automate it, but something definitely to consider if you're doing, planning a different operations process in-house. But what this system will do is it sends out an email to all of the clients once a month. They can opt out of it. You can change it to once a quarter, whatever it needs to be, with customizable content. It gives them the top 7 things that cause updated reports. So if any of those occurrences happen, they know to reach out to you, and it gives them a link to all the other situations that can trigger an updated report as well. So it's good to have some kind of automated drip system that's going to be notifying them with this content to let them know when to reach out to you so they stay in compliance. They don't start getting those $591 daily fines because, obviously, if those come in, they're going to want to have had those addressed earlier. They're going to be very caught off guard by it. It's just good to make sure they know everything they need to know before those events come up. So if you're looking at the total process here, you're talking about potentially 2 hours of firm staff time per report when you have to go through, it's education, collection, getting those document images, reviewing that, transferring it twice, getting the transcript shared, doing the reminders, doing the education campaign, storing everything. So it's a little bit arduous. If you have, say, full-time staff members assigned to this, and maybe they're doing 4 reports per day and they're managing this, it's not necessarily ideal, but it is an option on the table. So what we do here at FincenFetch is obviously, we're an automated software solution. We have about 24 features designed to ease this process. I'll show you what that looks like. If you have software in place, number one, it can explain the filing to the clients. So it does that by having a dashboard on both sides. When you invite the client, just like you'd invite them into a DocuSign, it explains the regulation. It explains every step of the submission process. So it actually answers those common questions as they go through it. And it's constantly optimized by all the users moving through it. If they ask questions on a certain point, then the user interface gets optimized and less questions, happen there. And then, of course, more clients are just moving along smoothly. So, it's very unlikely you're going to get questions because the system's doing that for you. But it's typically just, 5 minutes. You're going to invite your clients through the dashboard. You have to maybe you're going to pre-fill some information to make it convenient. But anyways, very, very small amount of time per report just to start and invite them in there. Of course, if you have software in place too, it's going to collect those document images. Sometimes it's going to do some extra bells and whistles, like when it collects the document image, it'll automatically fill the BOI report information with an OCR machine learning system that operates, and it puts all of the information in the right fields. This is very nice for accuracy because if you don't do little bells and whistles like that, the clients will tend to introduce some more typing errors. But if they automatically have it filled and they have to check it, much higher level of accuracy on their side. Of course, client reviews are part of the process as well. When you have a system in place, both sides have access to a report. When the report is ready, everybody can sign off on it. And then the nice thing is it automatically will e-file it into FinCEN, recover the transcript, share it. This part's all automated. Then it's also doing things on the back end, like providing access to that dashboard. So if they need ongoing reports, they can simply request them. They can see their historical reports. They can facilitate any number of companies, save owners in the dashboard, whatever they need to do. And then on your side, you have a dashboard that gives full awareness of this. You don't have to build a secondary, Excel system or, find some kind of operational tracking system because this is storing all the files. It's sending reminders automated to your slower clients if they haven't completed their steps in the right amount of time. You're customizing those emails. So it's, matching your firm's language. The whole portal's white labeling. So it's very much your part of your firm's experience. And it's also handling ongoing education for you, where it's letting your client base know about the updated report requirement. So it becomes a point where really you're just starting the reports, maybe 5 minutes per report. You're doing a quick review at the end once they've submitted it back to you after they've signed off on it. And then you're pushing it into FinCEN. From their perspective, of course, they just understand they're submitting the information. It was a user-friendly way to do it. But of course, it's automating a lot of this away. So if you're looking at the software route, you can plan a very small amount of time per report. If you're doing the manual process, then you're probably looking to, staff up a little bit if you're handling the scope in any kind of major fashion. So something to consider there, most definitely. And then I have a question come in here. Is there an appeal process for a penalty imposed? So as of right now, FinCEN hasn't shared any details on whether or not they're going to allow those appeals. But I can say that the department seems like it is very, very busy right now. And even a general contact request is taking a long time to get answered. So I probably wouldn't I wouldn't count on them too much to have a good well moving and reasonable appeal process in place. I think if there is any lenience, my guess would be that it would be a more sweeping rule, such as if you forgot to file the initial report within 90 days, we did by the end of the year, we're not going to penalize you. I think that's about how they might deal with any kind of large amounts of non-compliance in a more general way rather than on a case by case. Because one thing to keep in mind, if you just run the math on what it looks like, you have 300 employees handling 40 million reports. It's a lot of reports per person. And FinCEN's doing about 10 other things over there as well, between the different things that they've been tasked up to do. So, the CTA team is most definitely overworked. So I'd imagine that most of what they'll do will be sweeping or automated. And then one important thing to go through as well is, regardless of the operations process you're choosing, if you're looking at automated software that'll make this very, very easy and kind of operate this new line of business for your firm at 5 minutes a report, or whether you're kind of setting up your own manual processes, the four most important considerations around this report are these ones here. Reducing report time. If you can decrease the amount of time per report, obviously, you're able to process more reports. Almost all of the market is pricing these reports at a flat rate anyways, which is advantageous if you have a system or a process that's taking the report time down to 5 minutes. You're billing the same 400 per report. It becomes a very, very profitable revenue line for you, in excess of thousands of dollars an hour when you work out the math there. But obviously, as your process becomes slower per report, it's more of a staff burden. So the better that you can reduce the report time without introducing errors, the better that you're going to do there. Now, next is eliminating the errors and delays. Having reminder systems for the clients is critical. Having data checking systems where you're not introducing new errors when you're doing the filing, that's absolutely essential. If you have software in place, that's going to handle that for you. If you don't have software in place, then you need to kind of plan these processes internally, whether it's double checks or whatever you need to do. And then also, of course, there's client reminders to make sure everybody's meeting those deadlines, tracking the deadlines. Software dashboards do that automatically, though. Next is the organizational systems. Once you have these filings submitted into FinCEN, of course, you need to keep everything organized by the company. A lot of existing software platforms are not geared up for Corporate Transparency Act yet. So it's often going to mean, if you don't have special licensed software for this, that you have to, use some kind of more manual process, like a secure driver or something like that, to organize these reports, or just kind of blend them in with your existing systems the best that you can. And then supporting ongoing compliance, that's critical, because remember, it's not a one-time filing. Your clients will rely on you for updated reports in the future. That doesn't have to be a long and difficult process for every report. The more time that you invest now in planning the operation of what it looks like to do an updated report, the smoother it will go in future years. If you have software, this is very easy. They click a button from their dashboard. With FincenFetch, it allows them to start the updated report, loads in the prior information. It's essentially about 2 minutes to do an updated filing, even if they have a lot of companies that can update them across the board. If you're not using a system like that in place, consider that methodology and how you can at least best replicate it in a more manual way, to make sure that you can handle these in an easy way. And this is one of the reasons that I touched upon those ongoing filing charges here, because after the initial year, you're going to have to keep staff trained on this, keep the systems online for what this needs to look like, whether it's manual or software. Make sure people know how to refile these reports when the time comes to it. They have reminder processes in place. So when you're adding this service to, your repository of offerings here, you definitely need to consider that there's going to be some costs or some, operational factor that you need to consider for your firm. So that's why we're seeing a lot of this, type of line item billing here, where you have, along with an annual report for the Secretary of State, you also have annual CTA compliance getting added to that. And it seems like clients do understand that. Most importantly, we tend to find that they just don't want to deal with this themselves if they're reaching out to you. They just want to have this filed, and they want to know that it's good in future years. So, some marginal billing for offering a new service seems to be well accepted. And I don't think any clients are expecting the service offered for free, and nobody's offering this for free. So, they do understand that. But most importantly, they just want to make sure that they're free of those $591 daily fines, not getting those $10,000 fines, not having to worry about this 2 years in jail threat from FinCEN. Clients just generally want to know this is handled for them. All right, so that takes us to 1250 here. I think that's all the kind of critical information. What I can do now is I'll open it up to any questions that you have, and I'm happy to answer anything around this, whether it's around the platform or the regulation, whatever you'd like to touch upon there. And feel free to put them in the chat, or I don't know if you can unmute as well to ask those. Okay, while you think up some questions here, I'm going to share a link as well. 1 second, let me just pull something up. A couple of helpful resources that I'll include here. If you do want to understand a little bit more about the exemptions around the Corporate Transparency Act, we have some things on our website that can definitely assist with this. So one important thing here is the filing FAQ. Now, what this will do is it'll take all of the most common questions that we see around FinCEN. It explains it in a very, very easy way. We actually see a lot of firm staff will utilize as a resource to train their internal staff members about any of this regulation. You can search this page as well and walk through anything. One other one is the exemption checker. I do recommend taking a look at this. We go into the 23 exemptions and exactly all of the prongs. One thing to keep in mind, a lot of clients will self-report an exemption they don't necessarily qualify for. So they'll forget to look at these prongs. They'll say, okay, I'm a tax exempt entity. Well, it's a specific type of tax exempt entity that doesn't need to file reports. So that's something that needs to be well known. So if you're looking at exemptions, I do recommend maybe just bookmarking this page, scrolling down under the exemption checker quiz here. You can also click any of these to find the section. And then this will distill those exemptions in a full but understandable way for your firm's team members here. So you can walk clients through, okay, do you qualify for all of these or one of these or, whatever it needs to be. And you can see we have those kind of those parameters here. So you'll know. But anyways, it's a great place to take a look at those exemption checkers. A couple other resources here. If you want to look at what software looks like as well, we do have some video demos available for you here. And then I definitely recommend the ebook. This ebook download, and actually you can find this through your members page as well. So if you go through the member page, you'll have access to a discount link and everything, and then a quicker way to access the ebook that'll be shared afterwards. And anyways, that resource, this will walk you through a lot of what we talked about here, and then even a little bit more insight as to kind of how you want to plan your operations processes and what it looks like to price this out, what the market sizes are, more nuances about the reporting process and all of that. I see a question. Can you ask a question for me? Can you
Charles,
just,
I'll ask the question from the Q&A if that's okay. What
yeah,
is the customer's resource if the software or other computer system or program malfunctions or makes an error causing risk or loss to the customer?
So we do a couple of prongs there. We do have ongoing support. So any of your firm staff that are coming through either their dashboard or if your clients are going through their invited portal flow, there's a button there that'll allow them to get information from our staff. Our staff, we're trained on both the Corporate Transparency Act reporting process, but also the platform itself. In fact, everybody at our company is. So they can definitely answer questions over there. Outside of that, our platform is built in a certain way where it tracks reports all the way from the beginning with a percentage bar on the dashboard, all the way through to a full filing with FinCEN. And even if there's a situation where a FinCEN API was, say, down at the time or something like that, our system kind of self-heals these reports, meaning it will resubmit them if it gets a common error, that it can resolve without intervention. It'll do that and resubmit it. And then if that doesn't work, it'll put a badge on there and it'll give you the exact error and the recommended resolution. Maybe you need to get a different data point from the client or something like that. But we typically only see that on about 1 in 500 reports. And it's typically because FinCEN's API has some kind of rare thing that populates up that, maybe it doesn't like a certain field, but we let you know exactly what that is. But there's not really a situation on our portal where, you will just have a report get, into some kind of black hole situation where, you won't have access to it or you won't be able to see that it was fully filed.
Great. Another question is, do law firms have to register under the statute?
Yeah, for the BOI reports, yes, law firms are not a currently exempt category. But you might qualify for the large operating company exemption. So if you do have 5 million or more in annual revenue, you have 21 or more full-time employees, then you might be exempt for that. But assume every U.S. company is a reporting company unless they have one of those exemptions or they meet that large operating company threshold.
Great. I think there was a cost about FincenFetch software as well.
Yeah, it just depends on the size of the firm and the size of the client base. So we have a really, really kind of, I guess, firm compatible pricing model. It works on tiers. So you select a tier based on the number of seats you need. Each seat is operated by a reporting company. So if you have, say, 100 reporting entities you plan on doing reports for, you'd select a 100-seat package there. Seat prices vary. As you have more seats, it will decrease. But to factor in your discount, you could look at maybe high 30s, mid to high 30s per reporting company per year using the platform. And it includes updated reports, it includes all those reminders and everything. So it very much matches. That's not per month, that's per year. So it'll fit very well in your billing models.
Great, thank you. Another question is, my question about malfunction referred to a customer getting into trouble with a regulatory agency for allegedly late filing, non-filing, or an error in filing. Computer programs are always perfect until they are not. Any recourse against your company, or must customers waive all rights in order to get the service?
Yeah, we haven't had any of those kind of situations, and then we do have a whole lot of insurance that we carry as well to if that situation were to occur, that would be in effect as well. But I mean, the one thing that no software is going to be able to stop is if they start the filing process on day 89 or something like that, and they don't return it till day 92 or something. There's going to be no way they're going to get a report in, but it's going to be late. There's no reason that the software would delay the process. We even have features that'll do things like auto file it once a review is complete and those kind of things. But I wouldn't see any new errors introduced by the software. Likely, if they got an issue with the regulator later on, it would probably be something like, the report that they filed with maybe, two owners didn't match their later, tax return or something like that, that might have listed, 8 different owners or, different people with more than 25% equity. But I can't see on the software side of it. Of course, anything can happen, but I can't see on the software side introducing any new problems.
Great. And I think this, did you go over where the person filing on behalf of a client or ID and I missed it? I think you did, but that'll probably be in the recording.
Which question was that?
It was the 1255 anonymous attendee question.
Okay.
See if I can message you.
I think perhaps I can't see the Q&A chat. I see the general webinar chat.
Oh no, sorry about that. I just messaged it to you directly.
Okay. All right. Perfect. Did you go over where the person filing on behalf of the client RID and I missed it? Yeah, I'm not sure of the question. If you want to clarify it a little bit more, I can answer it to the best of my ability here, though. So RID, I missed it. So generally, what's going to happen is, you're going to invite them to the report. They're going to fill out the company information or some of that you would have pre-filled from your dashboard if you want. Then it's going to walk through the beneficial owner. It's going to collect the ID, autofill the information, so it'll have the ID attached. The last step will ask for company applicants. What we typically see from firms is prior to inviting the client, they'll actually go into the report in the dashboard there, and they'll add their own FinCEN ID for company applicant. And then you'll have that already on the report ahead of the client. But there was one thing I did want to just quickly cover for you. This will just take a minute. You need company applicants as law firms. The place to go to get that, I just want to show you this, is right here. It's not the regular filing flow right here, but right here where it says create a FinCEN ID. You'll want to get the FinCEN ID through this link. Now, one important thing to note, you'd think that FinCEN IDs would be at the firm level. They're actually not. They're at the individual level. The reason is that FinCEN, say there was a rogue attorney that set up a whole bunch of entities and they all turned out to be money laundering later on. They don't want to know the firm. They want to know the actual person that was, engaging in those services. So you go through this, it's the login.gov. You give it your ID and the same information you give on a BOI report, and it'll spit back out a 12-digit number. That's what you'll use as a company applicant, both through our portal or on any of your BOI reports for clients. And then you won't have to, of course, provide any kind of your date of birth to each client and your home address or your ID, because that's obviously an unreasonable expectation. That's why they have this here. So you'll want to do it that way. All right, I think I saw another question come in. Is it a violation of due process? Yes, probably. So just to give you a little bit of a background here, FinCEN has not worked out all of these edge case scenarios. So likely there's going to be some challenges on this, especially when they start issuing fines and they'll have to have a process in place. I'd imagine that they will have some kind of process in place, but right now I can just tell you that we haven't seen that, and we haven't kind of seen them, moving effectively in that direction yet. But probably, towards the end of the year when they get these reports coming in, and definitely next year when they start, issuing fines out for those who weren't in compliance, probably that's when we'll see that update in place.
Oh, great. It looks like you got all the questions, which is wonderful. It doesn't look like there are any more, and we're at the top of the hour. So thank you so much, Charles, for attending, and thank you for all the attendees for being on the call. We will send out a recap of this to all attendees. You'll get the deck as well as the webcast. You can replay it later. It'll be a YouTube link, and you should get that in the next couple days. And hopefully it'll be an e-brief tomorrow. So if you miss it there, you'll have it there as well. Any parting words, Charles? Or I guess they can refer to our co-branded site and have access directly to you as well.
Absolutely. Yeah. If you have any questions on that, we're happy to answer that at FincenFetch. If you're looking for a software solution to make this very easy, our team can walk you through exactly what that looks like. I definitely recommend taking a look at that co-branded page because if you're scheduling a demo through there, it'll automatically apply your 20% discount. So if you end up engaging with the software, you want to capture that discount. It also has the ebook. And I see I did get some direct messages here. I could reach out to you with those information points as well.
Great. Thank you all very much. Have a great one.
All right. Thank you, everyone. Appreciate you taking the time. Bye.